quite a lot easier for the government to take a look at this and say that the reasons this person is buying a property with 60% ABSD might not actually be for investment. And that's where the whole money laundering thing comes in. And that's when people obtain monies easily, right? It's easier for them to say, I'm okay to pay this 60% ABSD. This is not saying that any foreigner who purchases a property with 60% ABSD is a money launderer. But what I'm saying is that when clients come to us, they do come to us and say, I want to move my business from my home country, maybe in Thailand, maybe in US, maybe somewhere in Europe. I want to move it to Singapore and obtain Singapore PR status. One of the reasons is that they want to purchase a Singapore property. And the ABSD for PR is 5%, compared to 60% is quite large. So if you have clients that are foreign clients, right, this is something that you can pitch to them. You pitch to them in an angle whereby if you move your business to Singapore, right, you can actually obtain Singapore tax residency status eventually. And then this will also save you on the additional buyer stamp duty if you want to invest in Singapore property. Then the whole notion about Singapore being a safe place, nice place to live, all this all comes in. But if let's say we're looking at it from a third party's perspective, right? A lot of foreigners actually nowadays, if you ask them to pay 60% ABSD, and the world is their oyster in the sense that they can purchase properties from all over the world, it's actually quite difficult for a foreigner to substantiate why they are looking at Singapore properties, in my personal opinion. Okay, but maybe that is something that you guys might have a different take. But I would say that if you move it from a point whereby if I can get you a Singapore tax residency status, eventually a Singapore PR status, but you need to move your business over, that might be a pitch for real estate agents to maybe the wealthy foreigners. Okay, but if you just push Singapore properties to them, right, and tell them that they have to pay 60% above what a local Singaporean will be paying, right, then that's a bit on a bit of a stretch. Okay, so what type of companies are there, right? There are private companies limited by shares and variable capital companies. Okay, in essence, right, these are the two types of companies that we'll touch on. The usual one that you guys see out there, right, is a PTE Ltd. So whenever you see a PTE Ltd, right, it's actually private company limited by shares. These variable capital companies you see a lot less often, and our portfolio in our corporate secretarial practice, right, I think about 95% are all PTE Ltd companies. So it's ABC Private Limited. But if you see a company with VCC at the back, that means ABC VCC. VCCs are essentially what we call, okay, in the past, right, it would be like an investment company. Let's say like I want to set up a company for investment, then I'll go to BVI, or I'll go to Seychelles, or I'll go to Jersey, I'll go to Cayman Islands. Okay, so these are the main reason why people set up companies in Cayman Islands is not just for tax, the tax-free status, but it also allows them to reduce their share capital easily. So they create like investment pockets, right, whereby we can easily refund capital to clients. But this is a bit about company law, right, which we're not going to go into. But I'll explain to you that essentially foreigners, when they come to Singapore, they will be setting up like private limited companies or variable capital companies. And VCCs, right, were only recently introduced about 2 or 3 years ago. Then it came into existence. The bill was actually passed in Parliament about I think about 3 years ago or 4 years ago. By our previous president. So she signed the bill about, I think, 3 or 4 years ago. Okay, Joseph Teo has raised his hand. Do we take questions now, or maybe you can leave the question in the comments. Then after that, what we'll do is that we will answer the questions accordingly later.
I suggest if you have any question, put it under the Q&A so that everybody can see, and then we will respond to it at the end of the presentation.
Okay, can. Thanks, Jeff. Okay, so 2 things that we'll touch on today, but essentially the last one, right, is a separate number 3. Okay, so the 2 things that we'll touch on today, right, is if you are going to recommend your clients to set up a Singapore company, let's say maybe you have a wealthy client that has a very viable and profitable business in, let's say, Hong Kong. And then for certain reasons, right, your Hong Kong client wants to move the business from Hong Kong over to Singapore. Then he would actually need to understand the compliance requirements for Singapore companies. Then this is what you need to know. So you can advise him on certain matters. Okay, and then number two, right, will be tax savings. And a compilation of these two, right, the final thing is that how to get an EP and perhaps eventually a Singapore PR. Okay, so number one, right, for compliance matters, this essentially is what corporate secretaries like us do. What we need to know, right, is that just like the Estate Agents Act or like, maybe the Land Titles Act, which property agents need to know, the rule of the land is what we need to refer to. And essentially, it's the Companies Act. So that's the law. Okay, so if you go online, if you guys are familiar, right, you can just Google things like, if you want to know your Estate Agents Act, then you just Google Estate Agents Act. Land Titles Act, that's for, when you deal with landed properties for property. But if you want to know the Companies Act, right, this is the law. So the Companies Act, you can just Google search the Companies Act. They'll bring you to the Singapore statutes online, and that's the law. Okay, so there's the Companies Act, and then there's the constitution of the company. So essentially, when I say constitution, some people may not understand the word because it's a bit complex. But this is normal legalese that I think it can be simplified. So essentially, when I think we should refer to this as the rule book of the company. Think of it as playing a game, and then the game has certain rules. So this is the rule book of how the company should be administered. Okay, so the rule book is particular to that company, just like a rule book of a game is only specific to that particular game. So different companies might have different constitutions, different companies have different rules of how the house is to be run. But the overall rule, right, or the overall law is the Companies Act, and that is the law of the land. So that means this is the law. So you can see, right, the company is within the law, and then the constitution of the company cannot circumvent the law, which means that if the company constitution says something that goes against the law, then it's outside this blue color circle. So I do a simple Venn diagram to illustrate what I'm trying to say. Okay, and generally, right, for companies, there are two government agencies which companies will need to adhere to. Number one is ACRA. So this ACRA, right, they administer the Companies Act. And number two, right, everyone knows them, the Inland Revenue Authority of Singapore. They administer the Income Tax Act. So a company will need to pay taxes as well. And then optionally, right, if let's say the company needs a license, maybe is trading overseas, then maybe you need maybe let's say like for us, we have an employment agency. So we are administered. We are governed by MOM. So Ministry of Manpower is a government agency that we need to adhere to. So that's an optional thing, that the license is attached to our company, and then we need to answer to Ministry of Manpower. But generally, the first two, right, number one and number two, are what companies need to answer to at all times. Okay, so what you need to know, right, in the company, there are officers. So namely, there are directors, and then there are shareholders, and there's a secretary. Okay, and a lot of people, I think you guys know, because you guys would work with maybe renovation contractors. Then there are some bad hats. I'm not saying that all renovation contractors are bad, okay, but I'm just giving an example. So there are some bad hats whereby somebody signs a renovation contractor deal with a renovation contractor, and then that renovation company goes bust. Then we can't do anything, because that we can't sue the directors, because there's this concept of separate legal entity, whereby there's a corporate veil, which means that when we incorporate a company, it's essentially like giving birth to a new person. So when, like for my company, Raffles Corporate Services Private Limited, if we do something wrong, Willie and myself, even though we're directors of Raffles Corporate Services, if we are not perpetuating a fraud, which means that we are not cheating people, Okay, if Raffles Corporate Services signs an agreement with another company, and then Raffles Corporate Services does not fulfill that agreement, then the other company sues Raffles Corporate Services, right? Raffles Corporate Services will be liable to pay, not the directors, not the shareholders. This is the concept of separate legal entity. It's a corporate veil, which means that the directors and shareholders are shielded from legal liability of the company. Okay, but there's a catch, which means that we as the directors cannot be perpetuating a fraud. We cannot purposely set up the company to cheat people of money. So if you have a client who's thinking of, I just set up a company and then I can be irresponsible, you have to tell him that's not entirely true. You will not be held liable for legal contracts which you enter into with other third parties, but you can't perpetuate a fraud. That means you cannot purposely set up the company so that you can evade liability and you can cheat people of their money. Okay, so this is something that you need to know. So essentially the directors, right? Directors are the workers of the company. So if you're a director, you are responsible for the day-to-day running of the company. Shareholders are the owners of the company. Directors are not owners, okay? So if you buy shares in Tesla, Singtel, UOB, OCBC, right? You're a shareholder, you're a part owner of OCBC. And OCBC doesn't ask you to go to OCBC and work for them. Okay, but the directors of OCBC are the ones responsible. So the directors have to go day to day and work in OCBC. Okay, so generally the directors, they are responsible for day-to-day running. So if let's say the company is not run properly, the company can be convicted, the directors can be disqualified from becoming a director. And if a director has 3 or more of his or her company struck off by the registrar, which means that if the company is not well run, the registrar of companies, which is ACRA, they can send a letter to the company and say, we're going to strike you off, which means that we're going to cancel you. You're no longer going to exist as a company. And if a director is non-compliance, and then the director will director, can you be the local director? Then eventually, right, the property agent tells us, oh, actually my client missing already, then how? But you are the director, you are responsible for the day-to-day running of the company, and the law makes you as such. So essentially, if your client asks you to do that, usually we will tell our clients or the property agent not to do that. We can always look for a nominee. That means there are people who are providing this service. Okay, so this in the news, right? Like men charged for role as director of suspected shell companies which receive money from scams. Okay, so this guy was a director, and then the company got into trouble. Then but all these cases, right, the director actually had some knowledge. Okay, so the law is not so unfair whereby you don't know anything, right? Then they catch you for it. But I think in all these cases, right, the directors, they have some knowledge of something wrong that's going on, and then they didn't make relevant inquiries into it. So that's the main reason why they are taken to task. But if let's say, like for example, like myself and Willie, let's say we're the directors of Raffles Corporate Services, and then Willie, right, for some reason decides to open a Maybank bank account, and then Maybank happens to, for some reason, open it without the other director's knowledge. Then what Willie does with that Maybank account, I cannot be asking him, hey, really, do you open any other bank account? Because that is a bit off. That means I cannot be 24/7 looking at really. But it happens that the Maybank account statement comes to our office and then it's put in front of me, right? Then that would mean that I know that there's an existence of this Maybank account. Then it would be reasonable for me as a director to question really, hey, really, did you open a Maybank account? And what are you doing with it? So this is how the law works. The law doesn't work in a sense that if you're a director, you are responsible for everything. But what an objective person, right, with the knowledge that he has, will need to inquire. Okay, so these are cases whereby essentially the director didn't inquire. Okay, but more common, right? Like this one, okay, this one is our client, okay. So the client really don't care, like what we call bochap, okay. So we actually tell the client, hey, you have to your company needs to do annual return filing. You need to put your financial statements together. Then the client didn't do it. Then they receive a summons to the excuse. Usually it's night court, so it'll be like after work, then you got to go down. The director or the secretary has to go down. Usually the director, because you can represent the company. The company is a non-living thing. Therefore, even though it has a separate legal identity, right? But it can only act through its directors. So its directors give it life. Okay, so imagine if let's say today, my company gets into trouble, right? Then my company can't walk to the court. Okay, so essentially what happens is that I have to get the director to go down and answer to court. Okay, so these are the more common outcomes for non-compliance. So they can actually get fines from IRAS. Okay, this is the separate legal entity thing that I've mentioned to you guys. Imagine the blue color is a normal human being, which means that if it's Jeff or if it's Greeley or if it's Daryl, then we are called natural people. Natural people are like us. That means natural people who are actually moving around, normal human beings. Okay, but a company, right, is also a person in the eyes of the law. So that means if you Google search quite a lot of statutes, when they say person, right, it also refers to a company. Okay, so this company, when you incorporate, is another person, so-called. Okay, it's another entity. That means that if I have a credit score, my company has a separate credit score. My company's credit score is inconsequential of my credit score. So if my credit score with the bank is maybe B, my company can have a credit score of A. And if my company's credit score is C, right, it doesn't mean that it will affect my B. Okay, so this is something that I need to clarify with everyone. Like I always mention, right, okay, so the issue now is that we need to understand why is it that companies need to be regulated. Okay, like I mentioned previously, the shareholders, right? If you're a shareholder of OCBC, what are you doing at home now? You're going about your daily life. You go home and sleep. Essentially, what you do is that you put money into the company as a shareholder. You own shares of the company. I mean, you can receive dividends. But what are you doing? You're actually going home to sleep. You're not doing anything. But when you're not doing anything, right, who is the one doing? The directors. So the directors are actually using your money as shareholders, right, to go and run the company. And that creates an accountability problem, which means that if the directors do something wrong, they are actually using other people's money to go and mismanage. So this accountability problem, right, is something that why we have all these rules and regulations set in place so that the law makes the directors responsible and accountable for their actions to their shareholders every year. That's in the annual general meeting. Then number two, right, is there's a possible use of the company to perpetuate a fraud. Therefore, there are some rules and regulations that are put in place to account for who are the beneficial owners of the company. And these are things that will be very useful for you when your client is saying, I am overseas, I want to move to Singapore, I want to move my whole family to Singapore, and to live and work here. I've got a lot of money, I've got a lot of business. What can I set up? Okay, because if you set it up properly for them, they're going to buy a property. Okay, so like right, the installment for property is essentially a rental. So if you want to pay rent, might as well just buy a property. You can gain the investment gains as well. But of course, subject to you not paying a exorbitant additional buyer stamp duty. Okay, so this is something important. If let's say your client asks you, if I set up a company, my company gets into trouble, what will happen? Actually, nothing will happen to that person. Okay, but the director, right, must at all times act honestly and use reasonable diligence. So you can see this is very broad. So in the Companies Act, Section 157, right, gives a very broad explanation of the director's duties. Okay, so the director just have to act honestly and use reasonable diligence. My reading of it is, as a director, you need to account for your profit and loss, how much money you make. But the thing is that not every one of us goes through an accounting course in NTU or SMU, okay? And not all of us have basic principles of accounting knowledge. Just like an accountant might not have the knowledge a real estate agent has in the real estate industry, but you don't expect a real estate agent to have the accounting knowledge that an accountant has. So what does this mean? If you are a director who does not have accounting knowledge, then the reasonable, diligent thing for you to do is to engage someone who has this knowledge to take over your role, to account for the profit and loss and the finances of the company, so that you can make the proper declarations to the registrar, which is ACRA. Okay. Okay, so then this one, right? This section 197, when I mentioned about the accountability portion, the section 197, right, states that every company needs to lodge with the registrar after its annual general meeting. This is something called AGM. So every year, the directors need to present to the shareholders, this is how the company is doing. Your investment is in this company. I'm presenting to you how the company is doing. And then we present it in a meeting. So you essentially see a meeting. Of course, nowadays we have virtual meeting like Zoom, or some can be paper signing only. But imagine a huge town hall meeting, which is essentially like if let's say IEA holds an event, then all the agents come. Imagine that type of meeting. Okay, so that meeting, the directors have to show the shareholders this is how the company is doing. Any point in time the shareholders want to ask a question, they can raise a question at the meeting, and then the directors have to answer. So they have to account for the actions throughout that 1 year. Okay, and then what does ACRA want you to do? Once the company has finished its annual general meeting, it needs to take this annual general meeting, report to ACRA and say that everything is clear. We held an AGM, all the shareholders are satisfied, the financial statements were passed. That's the accountability portion to the registrar. So the registrar knows, oh yeah, this company made a declaration. It has already settled accountability issues with its shareholders and its investors. So this company is well run. Okay, so Singapore has so many companies, but ACRA can't go one by one. Okay. Okay, so those are the accountability issues which I mentioned. But now back to how you want to incorporate a company. So that means now you have a client saying, I want to move to Singapore. I want to move my whole business to Singapore. Maybe I have I like hot pot, so I just use hot pot. So maybe I have a hot pot business, and then after that, I'm from China. Okay, I've got a lot of money. I want to come to Singapore to rival Hai Di Lao. Okay, but what do? I want to incorporate a company. So once I set up my business here, then I'll buy a property. I will move my whole family here. Can you do it for me? Then you guys are you guys, just like us, right? Might be the first responders. So we are first responders because we receive clients who ask us to do this, and then eventually they will say, oh, now that you've settled everything for me, so I want to buy a property because you put me down and you got my PR and everything for me already. So now I want to buy a property. That's on our side. That's what happens at our side. But I would believe that a lot of you guys, right, are also maybe on, I don't know, Xiaohongshu or WeChat, and then you receive clients who are asking, how can I move to Singapore? But they always come across in the property angle. So you can always tell them, what are you doing in China or maybe in Hong Kong or wherever it is? Would you like to move your business to Singapore? I can assist you with that. Then once you move your business to Singapore, right, then we can apply for residency status, and then eventually you can purchase a property, because that is what we see with some of the clients that we have. Okay. So just to take note, so when you incorporate a company, every company needs to have a resident company director. Okay, and this resident director, right? Okay, the wordings, right? I will not read off the slide, so I'll just explain to you what a resident director is. A resident director is ordinarily residing in Singapore, which means that if, let's say, like for me personally, Daryl, I am holding a pink IC, which means that I'm a Singapore citizen. But the law doesn't state that he has to be a Singapore citizen. He has to be a resident director. So which means that if my normal place of residence is, say, Australia, maybe I migrated to Australia, I cannot be this resident company director. Okay, but let's say a foreigner holding a Thai passport, that Thai comes to Singapore and is holding an employment pass. He is deemed to be a resident of Singapore because he's holding an EP. That individual can be a resident of Singapore, a resident company director. So it doesn't mean that the person needs to be Singaporean or Singapore PR. Okay, it just means that the individual needs to be residing in Singapore, and a valid work pass is residing in Singapore. So but of course, for employment pass holders, right, they need to be working at the company that is shown on their employment pass. So if let's say they want to be a director of their own company, we can apply for them, and then the employment pass will show their own company on the employment pass. This is something which at the end of the webinar I'll touch on route to becoming a Singapore PR. Okay, next right is registered address. So the first one is you need a resident director. Number two, you need a local registered address. Usually that's an office. So if let's say your client wants to set up an office, then you can always I don't know, search on Commercial Guru, or you have your own listing, right? Then you can recommend it to them. If you in fact, I've seen some quite entrepreneurial property agents, right? What they do is that they rent an office. I don't know whether it's property agents or is it insurance agent. I can't remember offhand, but they rent an office, so they handle the day-to-day office of the client. We also do that, which means that if the client say I don't want to rent an office, then I want a registered address, they can use our registered office. So like our office is in Orchard, so a lot of our clients, they use registered office address, right? Then they register as our Orchard address. But sometimes if it's your client, right, then you have multiple clients for doing this, then every day you're in office, right, then normally you might want to register so that all the letters go to your office as well. Okay, then next, right, you need to appoint a company secretary. So like any individual like us, this one standard, but if let's say if the company does not have a company secretary for 6 months, is okay, but longer than that, then it's non-compliant of certain act in the Companies Act. Okay, then every company needs to appoint an auditor. However, if you are private, you might qualify for audit exemption. So usually the small companies, they will qualify for audit exemption. Those total revenue does not exceed 10 million, total assets do not exceed 10 million, or do not have more than 50 employees. So you can see, right, those small setups, right, actually they don't need audit requirements. So you don't need to hire an auditor. You can have unaudited financial statements. Okay, so our accounting records, okay, you can do it in-house or outsource. Usually when the clients, this is our bread and butter in RCS. So clients, they outsource their accounting to us. And what happens is that usually through WhatsApp or email, right, they will email the invoices or bills to our office. And after that, we will prepare invoices or bills and then we'll settle for them. So usually we take like a monthly fee from the client. But they can do it in-house also. So that means that if you can keep your own accounts, your own company's accounts. Okay, so this is something that all companies need to keep. They need to keep proper accounting records. Okay, so this is something that your client will ask you if you want to incorporate a company. And I say this because I have people in the real estate industry who look to us to incorporate companies for their clients for this exact purpose of what this webinar is about. Okay, so company stamp and company letterhead, right? Basically, all company documents should have the company name and registration number. You can print documents on company letterhead. This is not very important, okay? Most important is actually the directors, auditors, secretary, and the registered address. Okay, this one is the one where is some anti-money laundering thing. So basically, we need to maintain a register of controllers. Register of controllers, right, for all you guys who have served national service, right, is essentially a book in and book out book. Okay, okay, if you know me, right, I always like to make things as simple as possible. So basically, it's a book in and book out book. Which date this person became a director, you book in. Then which day the person left as a director, you book out. So a controller is a person who has 25%, at least 25% share of the company. Okay, so that means if a person has control over at least 25% share of the company, he's deemed a controller. So we need to maintain this register. Who are these controllers? any point in time, these are non-public, which means that only the law enforcement agencies or ECRA, right, will be able to come forward and request them from corporate service providers like us. So there are instances whereby like maybe somebody in one of the insurance, maybe like for example, this person from Prudential, then he wants to set up a company, right, to do to trade insurance policies. Then maybe for some reason, maybe Prudential says it's not up to scratch, so you shouldn't be doing that. Then he puts his mother's name, okay? Then his mother is holding the shares in trust, but actually he's the one controlling. So we will need to update this register, say this person is a controller of the company. And can Prudential see this? Cannot. Prudential cannot see this because only people who can get this from us, right, is the registrar or law enforcement agency. So if police come to us, we have to release. Okay. ECRA come to us, we also have to release. So this sort of like contract whereby say you can't do this, then you circumvent by having a trust agreement, that one is pretty normal. Okay, so this one for foreign companies, this one not issue. This one is foreign companies registering in Singapore, so you can skip. So these are other registers which you need to have. So you can see there's nominee shareholders or nominee directors. Okay, like previously, right, if your client says, I want to incorporate a company, but I'm not a resident yet, can I use your name? Then you say, no, I don't use my name because any problem, right, then my CA license got issue. Then but I get for you a nominee director. Then you can look for us, then we can appoint a nominee director for you. The nominee director is also not a staff of the company. Usually is a person outside of RCS. Not usually, sorry, all the time is a person outside of RCS. We get nominee directors from outside, so they don't have credit issues or this, so we appoint them. The letters come to the office, to our office. So if they do funny things, we'll be able to see. But usually they can't do funny things unless the bank oversight or something. Okay, then at least we as the secretary, we are the gatekeepers. So if you have a client that wants to sell a company, because you guys are all holding CA licenses, so it's not ideal if, let's say, the company gets into trouble. So the money that you want is a commission on maybe the luxury property that he's going to buy after he gets a PR. Because if he gets a PR, right, he confirm can buy a good property. Okay, this one is GST. So this one I can skip. Okay, so any changes in company particulars, they have to inform us also. All this we need to skip because this one essentially, change anything, then you just tell the corporate secretary, we will go and file for you. Okay, so these are the reporting and filing requirements. So like I mentioned previously, there might be more reporting requirements which you hold if you hold certain licenses. Like for us, our associate company, right, is a Ministry of Manpower employment agency. That's how we are able to apply for the work passes and then eventually for the PR. But because of that, right, we need to report to Ministry of Manpower. So like I mentioned before, we need to report to ECRA and we need to report to IRAS. So corporate tax filing is every year, deadline 30th of November, which is 2 days from now. Then ECRA, right, is 6 months. Within 6 months after the financial year end, you need to hold your annual general meeting. After annual general meeting, 1 month, you need to report to ECRA and say, company has fulfilled annual general meeting. Okay, so this one, like I mentioned, annual return filing. And this is estimated chargeable income. This is a tax filing. This one I think maybe you guys just know will do. So end of the financial year end, within 3 months, right? All companies are required to file ECI. It's just an estimate. So eventually, if your final corporate tax comes out to a different figure, right, then they will adjust at the corporate tax period. So this sorry, this is 30th of November now. Forgot to change this date. Okay, another thing, right, is data protection officer. So another reason why property agents should not do this, right? Because property agents because you contact so many people, so there are times where, because you guys are dealing with individuals, so there are instances whereby you might cross data protection lines inadvertently. But another thing is that by default, if a DPO, a data protection officer of the company, is not appointed, the default, right, is the director of the company. So if you, like, you will lend your name to your client to incorporate the company, then you essentially are the data protection officer if there's no other data protection officer. But if you are really the data protection officer by default, what you can do is that you can get the company to appoint data protection uh, data protection company to handle this. So like within my office, right, there are 2 people who are data protection officer certified. So they went through the course. So sometimes our clients will say, I need a DPO, then they will get us to supply the DPO for them. Okay, but this one is compulsory, but the act hasn't come down hard on public yet. So as you know, the laws are such that whereby if there's a point of concern, then the regulators will come down hard. Okay, so that is essentially the tax, the compliance portion. But then usually clients will ask, okay, so I incorporate the company, right? Then what are my taxes? Okay, so a few things, right? You need to know. Singapore's corporate tax rate is 17%. But there are generous rebates, right? So if your effective tax rate is much lower. And then if you set up a VCC, there's tax exemption. Basically, if the VCC spends 200,000 per year, then that year no need to pay tax. What happens, right, if I can summarize, is that Singapore effectively domicile all the offshore jurisdictions into Singapore, which means that in the past, if you want to set up a company to do investment, you will set up a Cayman Islands company. This one needs some appreciation of company law already, but the main rationale for it is not solely because of it's tax-free. It's also because it's easy for me through the jurisdiction of maybe Cayman Islands, right, to refund capital to my investors. That means I want to return money to my shareholders. Easy for me to reduce capital. Okay, but normal private limited companies can't do that. So Singapore did this Variable Capital Companies Act, and then there's this VCC now. And this VCC has this tax exemption. If you spend 200,000, right, for that year, right, and some other qualifiers, right, essentially you don't need to pay tax, okay, on your investments, because you maybe you pool monies together, then you say, okay, we buy this plot of land, then we build one condo, then after that we sell, then maybe we get one agency to sell already, right, get money, then now all the money go back to the company, but you want to return to investors. The VCC is a corporate structure that allows you to do that easily. Okay, so this tax exemption in the Income Tax Act, Income Tax Act, right, is under 13H, 13R, and 13X. These are the 3 sections, right, in the Income Tax Act that pertains to VCC. Okay, but this one a bit complex. You need a MAS regulated fund manager. Okay, so that 200,000 spending, right, also can be like rental for the office. You pay the fund manager, you pay the corporate secretary. All these also count as 200,000 and sure hit. Okay, so what we are trying to do, right? I feel, right, the regulation is trying to do is they are trying to attract all the people who set up funds in Cayman Island, Seychelles, BVI. You guys don't need to go there and set up anymore. You guys can come back to Singapore. We have the same structure. It's also tax-free. It's called Variable Capital Companies. And that, in my personal opinion, right, is one of the reasons why the property market continues to go up also, because when you attract the wealthy, right, we essentially are an option for this sort of corporate structures already. Okay, Singapore is one of them. Okay, so what are the tax exemption schemes? Now we go back to the private limited companies. Okay, so these schemes, right, exempt certain chargeable income, which means that no taxes will need to be paid on exempted chargeable income. Okay, so that means if you earn this amount of money, let's say I'm IRAS, I close my eye, imagine you never earn this amount of money. Although the corporate tax rate is fixed at 17%. Okay, so there's 2 types of tax relief scheme. One is for new startup companies. The second one, right, is partial tax exemption scheme for all companies who don't fall under the first one. So if you just incorporated a company, you fall under the first one, except for certain exemptions. If number one don't fulfill, then number two can apply. Okay. So this one, right, is the first 3 consecutive years of assessment from the incorporation. So the day you incorporate, 3 years from then. Okay. So these are the qualifying conditions. A company must be incorporated in Singapore. It must be a Singapore company. Okay, we're not going to give tax exemption to a foreign company. Okay, so the company must be a tax resident in Singapore. So basically, the management, the decision making must be in Singapore, and then the total share capital has to be held beneficially or held directly by no more than 20 shareholders. Okay, so this one is a few criteria, but it's not available for investment holding or property development. So if your client wants to set up a company, get this tax exemption, but it's an investment holding, which means that you use the company to hold a commercial property. Okay, because don't have ABSD, right, commercial property. So hold a commercial property, then you don't get this tax exemption scheme. This one is also applicable for Singaporeans. So some Singaporeans, they incorporate a company, register for GST because the seller is GST registered. This one quite common for those who do commercial properties. Then they will incorporate a Singapore private limited company. This tax exemption scheme for new startup also don't apply to them, but can apply, the other one can apply, which later I will touch on. Okay, so if you're doing investment holding or property development, right, this new startup company not applicable to your company. So like property development is like maybe Far East, right? They have a new project. Then usually there's another project account. Maybe they incorporate another company. Then because it's doing property development, that this tax exemption scheme will not apply to that startup company which they set up just for that development. Okay, so this one, this is just some computation, right? If you really have a client who set up a company, be it a Singaporean or somebody who's already living in Singapore, then want to set up a company, or your foreign client, right? There's a way to calculate the first 3 consecutive year of assessment. This one is quite important because you calculate wrongly, right? Then you might eat into your max the max period that IRAS will treat you as a new startup. Okay, so this is just an explanation of why we keep it as day of incorporation, then 365 days as your first financial year. So it will look quite ugly in the beginning. Like today, if you incorporate a company 28 November, we usually set the financial year end as 27 November of next year. And this is just an explanation of why. But don't worry if you don't understand this. Any point in time, if you have a client, then you just call us and then we'll just explain to your client. Yeah, you don't really need to know that, but I think it's important to know how much savings the client can have. Okay, so if the tax exemption is on the first 200,000, so if you see, right, the 75 exemption on the first 100,000, which means that if the company makes 100,000 profit, right, the first 75% is IRAS imagine it never happened, which means that they only tax 25% of this 100,000, which is 25,000. Then the next 100,000, right, they only tax 50% of that 100,000, which is 50,000. Okay, then they will tax it at 17%. So the effective tax rate is less than 17%. Okay, so I show you the example, right? If let's say the company makes 200,000, then there's an exemption of 75,000 for the first 100,000, leaving only a balance of 25,000. So the first 100,000, IRAS will not say you made 100,000. IRAS will say the company only made 25,000. For the next 100,000, IRAS will say the company only made 50,000. So the normal chargeable income, right, is 75,000. Even though you add this 25 and 50 together, you get 75,000. Even though the company made 200,000, IRAS will say the company only made 75,000 and tax the company 17% of 75,000, which is $12,750. If I'm not wrong, right, this is actually lower than personal income tax. So corporate tax is actually lower than personal income tax. So this is the main rationale why some people like to do business under companies. And once this tax has been paid, okay, the company is free to declare dividends back to its shareholders. dividends in Singapore are tax-free, which means that you just imagine this rule where each dollar can only be taxed once. So if the company has already paid tax on that dollar, when the money goes back as dividends to the shareholder don't need to pay anymore. Okay? No more personal income tax for that dividend. So this is another one whereby the normal chargeable income is 80,000. So there's an exemption of 75%. So you only although the company made 80,000, IRAS will say company only made 20,000. And then 17% of 20,000 is only 3,004. So your personal income tax, if you have 80,000, right, I think your tax payment is more than 3,004. Okay, you can see the personal tax rate on IRAS's page. Okay, so these are further examples of calculations. Okay, I just gave different permutations, but we'll just run through very quickly. So if the company does not qualify for this tax exemption scheme for new startup, which means that the company is not a new startup, it will fall under this partial tax exemption scheme. So this partial tax exemption scheme is not as attractive as the tax exemption scheme for new startup, but it also provides savings. And if I'm not wrong, right, it's lower than personal income tax rates as well. So if let's say in my own personal capacity, right, if let's say I'm a director of the company, and this company is 100% owned by me, in essence, right, I can choose to draw a salary from the company, which means that the company pays me salary, and then I have to pay my personal income tax. Or let's say I work for the company, but I don't, because I'm the only shareholder, which I'm not now, okay, so I don't do this, I draw a salary, okay, but then if let's say I'm the only shareholder, only director, I can choose to either pay myself a director's salary, or I can choose to pay myself dividends, which means that if I pay myself director's salary, I need to declare personal income tax, just like agents need to declare personal income tax for commissions which agents receive. But for directors, right, directors will receive a salary. We pay personal income tax. For if I don't receive a salary, the profit, because if I don't draw salary, the company has more profit. Because less expenses, salary is an expense. Then more profit need to pay higher tax to the government. But even when I pay higher tax for IRAS, I'm not taxed the same rate as I am for personal income tax. So when the company issues back dividends to me, I don't need to pay tax anymore because the company has paid tax already. Okay, so this is something where some people, they do tax planning, right? If the company is fully owned by them, then they choose not to pay themselves so high a salary. They let the company pay the tax so that they can get more favorable maybe tax rate because the company pays the tax instead of them. Okay, so like this one, right? The first 200,000, there's a 75 exemption on the first 10,000 only. Okay, which before was 100,000, now it's 10,000. Then a further 50% exemption on the next 190,000. Then you put the tax rate of 17%. So for 200,000, right, you can see the exemption is only 7,000 of the first 10,000. So it is behind 2,500. Then the next 190,000, right, is 95,000. So the tax payable is 16,575. I think previously was 14,750 or something like that. Okay, so you can see that even the partial tax exemption scheme is usually lower than personal income tax, but if newly set up companies, right, is quite a lot more attractive. Okay, so these are all the other calculations. Essentially, what we are trying to say is that for your clients, right, when they come to Singapore, and then after that they want to be more tax efficient, we can advise them accordingly as to what salaries to pay themselves, whether to live in the company, and then if you're a resident of Singapore, then you're bounded by the Income Tax Act, right? Then you would, if your company has already paid the tax, then you don't have to pay the tax anymore. And the corporate taxes are a lot cheaper than personal income taxes. So this is something to take note of. So your clients may want to do this. Okay, so there's a very fine line between tax planning and tax evasion. Okay, so there are articles whereby people they max out the 200,000, then they incorporate another company, then they max out 200,000, they incorporate another company. That one clearly tax evasion, but tax planning would be something like if let's say I have a client, right, who is doing fashion, so they do like men's fashion, women's fashion, and children's fashion, and I realized that the men's fashion actually could survive on its own, which means that the thing is that essentially the test, right, if I could simplify it, is when I split this up, right, can this entity stand on its own and survive the test? So my client split up the business between men's fashion and women's and children's fashion, and then the men's fashion portion, right, was a separate company, and then they enjoyed partial tax, the new startup tax exemption again for the men's fashion, and that isn't wrong because they spin off and there was another website and everything, so it was a total new business altogether. Okay, this one is the one that clients ask a lot, and we get a lot because we have clients that keep on asking us like, I want to move everything here, then what about rental, what about buying house, they ask us quite a lot about additional buyer stamp duty also, even though we're a corporate secretarial company. Yeah, but this employment pass is something that okay, there are qualifications of EP, so that means it's not everybody who can get an EP. There are certain factors, right? 1st September, there are some rules that change. Essentially, if you have a client who is relatively young, maybe like in their 30s or early 40s, I think still okay. Come with family, still okay. Must be well educated, or at least have certain skills that are in demand. So every month, right, there's a list of skills that Singapore wants, and then you can actually check it on the Ministry of Manpower website. You don't know, right? You can look for us. There's actually a scoring system now from 1st September 2023. It's called the Compass system. You can actually fit in all your clients' criteria, and then we can do a pre-screening as to whether this person is qualified to obtain an employment pass. You need to have slightly higher qualification in terms of salary, right? So the salary for the EP needs to be a bit higher if they want to bring their whole family over. So this makes sense because you cannot be earning a low amount of salary, then you want to bring your family over, then you don't have money to sustain your family in Singapore. Singapore is quite expensive. Okay, so then after that, right, if let's say they incorporate their own company can apply for an EP for them to be the local director. Okay, so this is something to take note of. So let's say your client say, I have a business, maybe in Hong Kong. I want to move to Singapore because Hong Kong now, I think not so good. I think Singapore is a better place long term. Okay, I want to move to Singapore. Then you tell your client, say, okay, we move your Hong Kong company to Singapore. We can't move it to Singapore. We need to incorporate a Singapore company. Since you're a director in a Hong Kong company, we apply for an employment pass under the Singapore company. Then after that, we need your Singapore company, because it's a separate legal entity, just like I mentioned to you, a company is a separate legal entity. The company applies for the director. The director doesn't apply himself or herself. So the company will apply for the Hong Kong person to become a director of the Singapore company. Once the Hong Kong person is employed, the Singapore company needs to issue 6 months of payslip to this person. After this person has received 6 months of payslip, then we can process the application for Singapore PR. Okay, then after that, it takes another 3 to 4 months for ICA to tell them whether the application approved or not. But usually when the educational qualification is high and they are younger, the chances very high. Okay, so there's a scoring system. So if you have any clients who want to incorporate the company, become a director, get an EP, then apply for Singapore PR, yes, we can do it. But usually the client will say, confirm or not. Nothing is confirmed. But what we can do is that if we have the client's details, we can do a pre-screening, because there's a self-assessment tool available. You guys can do it yourself. You can go to Ministry of Manpower. there's a self-assessment tool, you can do it yourself. If not, you pass it to us. Internally, we have a self-assessment tool, also by the Ministry of Manpower, but we can do the screening, we can tidy up, we know what's required, then we can advise the client accordingly. I think we have a Google form on our IEA website. So usually there's a Google form that clients fill in, then we'll do screening. So usually if let's say the client not likely to get an EP, we don't apply for them. Okay? And then once the EP has been received, they can come to Singapore. They come to Singapore, they look for their properties, then that one is your job already. Once they settle down everything, then they run their business in Singapore. After 6 months, we go back to them and say, okay, now it's time for you to apply for Singapore PR. So there's a route. There's no more like, oh, you know, I put a lot of money, then I get Singapore PR straight away. That type of client maybe not easy to come by also. So this is the normal route which people are taking. Not just real estate agents, but also property agents. Okay, so we deal with quite a fair number of these cases as well. Okay, so like but really high end. So we have clients that are from the medical field. Then we have clients that are business people. Then they are quite they are startups, VCs, people from, I got client from Holland, I got client from Germany, and then they come in, they bring their business over, then they settle down. Yeah, then after that, they look for rental, then after that, eventually when they get a PR, they look for Singapore properties. Okay, so this is the thing. Okay, so there's employment pass. S pass holder can apply for PR. Work permit holder cannot apply for PR because work permit holders are semi-skilled to unskilled. So Singaporeans, Singapore wants to take in skilled to highly skilled workers. Okay, so that's all for my presentation. These are our websites. We are rafflescorporateservices.com, and then but our price list and our services, right, are on singaporesecretaryservices.com. So basically what happens is that we amalgamated the business. So I merged the business with another practice, then we incorporated Raffles Corporate Services. So previously it was another CorpSec. Yeah, then we just did the amalgamation like earlier on the 1st of January of this year. But before that, we were separate practices. So but anyway, our price list and services are still on our older page. Any point in time you want to contact, I think really can leave your contact number inside the chat as well. Yeah, so you can email or WhatsApp or call Willie and me. Yeah, I might be the one presenting, but Willie has just about the same or if not more knowledge than me as well. Yeah, so don't worry. Any point in time you guys got any questions, you can come back to us. I'll stop sharing now. I hope it has been comprehensive. Hold on, let me see. Are there any questions?
Yeah, there's thanks, Daryl, for your 1 hour long presentation.
Is it too long?
Yeah, no, it's not too long, but I think a little bit too much on tax. Tax is something that I think they will leave it to the tax expert. I think more interesting is to our members and agents out there is when we are faced with a customer who wants to set up a company, at least we know where to start off, right?
Okay.
I believe there's one question so far. How many types of EP a foreigner can apply, and how long each type of EP usually takes?
Okay, so for this, right, there's only one employment pass. Okay, there's another employment pass called the personalized employment pass. Personalized employment pass, right? The qualifications are now pretty high. So in the past, right, it used to be 12,000 income per month, but now I think, if I'm not wrong, it's 20-something thousand, and that has to be from their home country. They have to show a proof of 1 year of their income from their home country. Usually, the people who come to us, they are business owners, and then it's usually family wealth. So when it's family wealth, right, they are not actually employed in an MNC company paying them that significant salary. So there are a lot of questions if, let's say, their own company pay them such a high salary from MOM. So although there are other employment passes, but the only employment pass that should be of any consideration to all of us after 1st of September is the basic employment pass. So there's only one EP, is the green color card. Actually, all the cards are green, but there's only one green color card with the word employment pass on top. Because that is the one that will bring you your PR. Your PEP is only valid for 2 years. After 2 years of PEP, you still must change to a PR, to an EP, sorry. So personalized employment pass still must change to employment pass. Yeah, so for all clients, right, they have to qualify for employment pass. And each application, right, usually when all documents are given to us, when we submit, usually takes around 3 weeks. Yeah.
Thank you. Thank you. Second question, Daryl. Any minimum fund sum top up qualify for VCC?
I'm not sure if I'm getting the question right, but I think what they're trying to say is that what is the minimum asset under management, which means that the amount of money that is being put in. Okay, so to run a VCC is actually pretty expensive. Just to give you a heads up, right? Like the fund management fee for a VCC is already in excess of like 30 to 40,000, which is what the fund manager will charge per annum. Okay, and then there are a lot of other fees included, right? To run a VCC, the annual spending is about maybe 400 to 500,000. So essentially, what happens is that most of our VCCs, right, they are in excess of at least 10 million. Then they will consider starting a VCC. So usually it's family money. Usually it's offshore. Then they want to re-domicile it back to Singapore. So these are the things that we receive. So there isn't a minimum fund because there are VCCs that are dormant, which means that they set up but no money is being put in. But they still have to pay, you see.
Okay,
Yeah.
thank you. Next question. Is there something called entrepreneur pass, and can one get it immediately?
So music playing.
Entrepreneur pass.
Yes, entrepreneur pass. Yes, there's an entrepreneur pass. You hold on, cause I think for some reason my music was playing. Okay, then yes, there's such a thing called entrepreneur pass. It's called Entre Pass, ENTREPASS. You can get it. You can get it immediately within a month's time, but the thing is that this entrepreneur pass, the route to eventually getting a PR is also a bit more difficult. And entrepreneur passes, right? They don't issue it so easily. Like for example, somebody says I just give you an example. On a daily basis, right? You can ask really. We get people from India, right, messaging us say, I want to start a company, and then I'm doing IT because like literally everyone. I'm generalizing, but everyone in India does IT. Okay, so then they say, oh, my IT company is very big. I do for these big companies. But that's actually not true lah. Okay, but then they say I want to apply for entrepreneur pass. But entrepreneur pass is really for people like, for example, Hai Di Lao. I want to bring in Hai Di Lao. The Hai Di Lao boss comes in on what type of pass? Maybe an entrepreneur pass. So even though there's an entrepreneur pass, right? But I think Hai Di Lao for me is because I use hotpot just now, so I just use Hai Di Lao. But I'm generalizing it. But what I'm trying to say is that the standard of entrepreneur pass, right, is we don't need to ask what this company is doing. It's the company's reputation. When MOM sees it, right, they know already. So if let's say your client's company is some maybe small company, but he says he has a very big track record, right? Generally, if people like Jeff, myself, really, we see it and we don't actually identify the company, right? Then I think this entrepreneur pass can don't apply because we only applied once for a client successfully, and this client was working for a large German company, and it was the German company who was applying for him this entrepreneur pass. Just for your info, right? The company is called Maersk.
Okay.
Yeah.
So Daryl, maybe I have a question. earlier when you mentioned constitution of the company, do I get to understand it's actually the article or memorandum of a company rather
Yes.
than a constitution? Yeah.
That was, sorry, it was previously called the Articles of Memorandums and Associations. So then, but now it has been merged together to become a company constitution.
Okay. You also mentioned that as an EP holder with a local address, they can be considered as a resident company director when setting up a company.
Yes.
But isn't that risky? Because an EP holder can get the pass expire or get revoked, then what will happen to the company?
Okay, when the pass is revoked, right, then ACRA will actually send a letter saying that there has to be a replacement director. And if there is no replacement director, right, then even for ourselves, right, we can't even do any changes. So like inside my system, right, let's say the company wants to maybe issue new shares, new investors want to come in. When I go in and click in my, because for corporate service providers, we have a system. When we go in and click, right, we're not able to access the company. They will give us a message saying that please get a replacement local resident director before you can do any other filing. So the company becomes handicapped. I think what we should focus on, right, is the rationale of why the resident director is needed. The resident director is needed is because we want somebody who is residing in Singapore, so that eventually if the company needs to answer for something, there's an individual who we can call upon in Singapore to come and answer on behalf of the company. So if they're all residing overseas, we can't do that.
Okay, thank you. We have another question from Joseph. Where to look for the government monthly wish list of employment?
Okay, you can actually you can Google search this thing called compass, COMPASS. Basically, it's a compass, like the north, south, east, west compass style thing. And then you search compass EP requirements. Then it'll bring you to this compass framework in the Ministry of Manpower. Then from there you can navigate the whole compass framework. So inside, right, there's a list of favored employment also, but I think usually I ask people to go and search on Compass. Yeah.
Okay. I hope that answers your question, Joseph. So let's say I have all the documents that you required to set up a company. How long does it take to set up a company?
Okay, because we are the filing agent, so essentially we hold the license. Generally, if let's say everyone is Singaporean, we can set up the company immediately. Secondly, right, if it's foreigners, right, what we need to do is that we need to run a compliance check with some compliance system. I think for real estate agents also have similar compliance system. Then it will take maybe about a day. Then if everything is okay, then we can incorporate the company on the second day. Yeah. Yeah, Singapore makes it very easy for people to set up entities, but that also makes us an attractive place for people who want to do funny stuff. So that's why there's a lot of compliance in place. Yeah.
Daryl, you also mentioned that people who want to use your company address as their registered address, but how much would it cost?
$200 a year.
A year, $200.
Yeah, correct. Yeah, our prices are listed on the website which I gave. I think I'll put it on the chat as well.
I think it's important that to the audience to understand how their clients, when they want to set up office in Singapore, what are the things that they can look out for. I know you spoke a lot and you presented a lot on tax. To me, it's a bit of too many figures to look at, you know, in terms of taxing. But I guess that can be looked after by a tax officer.
Yeah, but I think basically what agents need to look out for is we need to ask them carefully what's their intention. So if let's say they want to domicile in Singapore, right, then we need to from the start we need to take a longer perspective in trying to put everything in place for them to obtain their PR. And then I think it's important for agents to know the screening criteria. So I think if let's say you want to advise your client accordingly, right, then the Compass framework and the EP application framework on the Ministry of Manpower website should be very important. I think I have an article on Compass framework also. It really can help me to post the blog article on the chat from the Singapore Security Services website. So I explain carefully what it takes to get the EP, but my article doesn't explain the step to get a PR. The PR is actually 6 months after you get your EP. And then, but then when you work backwards, right, that the client will ask you, what is required for me to set up a company in Singapore? Basically, you only need a few things. You need a resident director, you need a secretary, and you need a registered office. These three things. Okay, so number one, can he be the resident director? He can. But from the start, right, he doesn't have an EP. So initially, we will appoint a nominee director first. Then once he gets his EP, we can replace the nominee director with him. So we will remove the nominee resident director and we put him as the resident director. Then from there, then the journey goes on. Because once he has a EP, right, he can live in Singapore for the period of time that his EP allows him to, which is 2 years. Yeah. If not, he's here on a tourist visa.
Okay. And one very sensitive question is that, would you advise real estate agents not to volunteer to be a resident company director should you have a foreigner wanting to set up a company in Singapore? What is your advice?
I'm a very risk to reward ratio type of person because the guy is not going to pay you. The guy is not going to pay you a lot of money. The money that real estate agents want, right, is the commission. Yeah, so that's your bread and butter. So I think that the money that he's going to pay you, right, is not worth it. You just get a nominee to be in that position. Yeah, and if let's say the nominee, right, you can always get a law firm, right, to do up an agreement saying that the nominee will act in accordance to how that foreigner wants him to act. Yeah, and then of course it's a personal thing, but I think real estate agents shouldn't be volunteering themselves as nominee director. There are professional nominee directors who know what they're doing. Okay, so they will come to our office and take the bank statements, they will check every month. You're not going to do that. You're going to be posting a property guru.
Okay.
Yeah.
Okay. Any other questions? Any other questions? You have the contact of Daryl and Willie. I know as per normal, sometimes people are shy to ask questions. You're welcome to contact Daryl or Willie directly. And should you have any clients who wants to set up office in Singapore, you can always seek their advice before you proceed. And you have heard from him that it is not advisable for us as real estate agent to volunteer or to get paid to become a resident company director should your client wants to set up a company. All right. The whole exercise is to let our members and agent know the risk involved and what it takes to set up a company in Singapore. And if you don't know anybody reliable, you can always go to both the gentlemen here. All right. Once again, Daryl and Willie, on behalf of IEA, we'd like to thank you for taking time to do this webinar with us for our members and as well as for agents. Thank you very much.
Thank you. Really got anything or not?
Thank you so much.
Willie, you got anything?
Everyone's still awake. I hope you all had.
All 30 over people are still watching, still here, because I think they want to learn.
Yeah. Something I personally take a bit more interest. I thought I'll just quickly share. I try to keep it under like 2 minutes or 3 minutes. Okay, it's the bank account. I am surprised nobody asked about that till now. Yeah. Of course, I'm not here to say, oh, you work with us, you definitely 100% get your bank account up. But we have dealt with enough banks, enough clients to have some field experience, and based on the field experience that we have gathered so far, we know roughly what the banks are looking out for. But the banks can always change what they're looking out for. So I would obviously, some clients also ask us, hey, how am I going to get my bank account up? guarantee or not, sure or not, they ask these kind of questions. And I'm likewise, your clients will definitely ask you because they trust you, ma. But one word of caution first is never represent yourself as the bank. Never ever tell them that, oh, you do this, confirm, or 90% or 80%, never, right? Of course, then what's the value here? You got to tell them that from a bank's perspective, what the bank is looking out for is legitimate business, and how to show the bank that you are having genuine interest to run a business, making a lot of money from Singapore, in Singapore, nothing wrong because it's legitimate, right? So one of the first, general things the banks would like to know from your client is what kind of customers they have, what kind of suppliers they deal with, where does the money go to, come from, in what kind of frequency, in a monthly basis, and what are the amounts ranging from. So you see, these questions, if you have to take 1 week to answer, yeah, it doesn't really speak well of your client or the referral, the lead that you have. Not saying that they must already have something in plan. They can take their time to think about it if they haven't come up with a business plan. So the second option is always coming up with a thought through business plan if they don't have an ongoing business in place, right? So again, business planning, business thinking, business kind of discussion, I don't know how much each of us here have, but anytime, let's say you all are interested to find out, say, hey, how do I start a conversation with my client on starting a business? Maybe they really have money, but they have no idea, right? Those who have ideas, already have business, don't need you to teach. You just say, hey, Singapore got a lot of tax savings. You can share this with them. Yeah. So I hope the bank account segment, it's not that we can directly impact and approve the bank account, but we work very closely with OCBC, and currently still the only bank that allows online verification, online processing, and application. The rest of the banks, as far as we know, like I said, they can change their SOP anytime, right? They require the physical presence of the applicants, your shareholders and the directors. So that may come up with a bit more logistically troublesome if they don't intend to fly in just to open a bank account, which is not 100% guaranteed again. Yeah. So this is as much as I quickly want to share before you all fall asleep.
All right. Thanks, Willie. Thanks.
Yeah.
Okay. Thank you, gentlemen. And thank you, everybody, for spending more than an hour with us. I hope we all learned something from the two gentlemen about overseas prospects that are keen to set up office in Singapore. Thank you, everybody. Thank you.
Thank you so much for having us. Thank you. Bye.
Bye.